equity investment is not just an investment. It is a change capital. It has a very strong focus on particular areas. It has a predetermined mindset as to where this investment will lead. So you have to make that distinction when you compare it with other asset classes. In terms of structure, there are two important ingredients of a private equity. Now, when I talk about private equity, I'm talking about a private equity fund. You have the limited partners and you have the general partners within a private equity firm. The limited partners contribute capital to the fund. They are typically high net worth individuals and institutional investors, whereas the general partners manage that fund. Sometimes they also contribute capital, but general partners manage the fund on a day-to-day basis, or they have the oversight of the fund much more regularly. The limited partners are essentially investors of the fund. The way a typical private equity fund works is that suppose it's a $100 million fund. Ideally, a minimum level of investment is defined. For instance, one could say that one investment will not be less than, say, $5 to $8 million. It has to make administrative sense for those who are managing the fund to make a decent size investment. They will not have investment in a very fragmented manner. Next. In terms of compensation structures, the typical investment income for a private equity fund is through the management fee that accrues to the company, to the private equity firm, and the owners of that private equity firm. And then the general partners typically are remunerated through carried interest. Thus, the share of profit that they receive once the private equity fund is wound up, say after 10 years or so, after maturing. So they get a certain percentage of the profit that accrues to the investors. But in typical cases, they have to meet a certain hurdle requirement before they can have the carried interest. The management fee ranges between 2 to 2.5%, but it has come down recently because of the financial crisis that we faced in the last couple of years. Next. When we look at private equity in the developed world, the funds under management in 2008 totaled $2.5 trillion. The concept has gained huge popularity in the developed world in the last 2 decades, totaling a quarter of the commercial financing market. So in the developed world, private equity is a serious business, and it's a serious source of funding. The field grew rapidly in an era of low interest rate, rising global liquidity, and increasing willingness to leverage. Because, as you might have noticed, that the era of between 2001 to 2008 was an era of low interest rates throughout the world. And that fueled the development of private equity all over the world. Since then, especially after the 2008 crisis, the deleveraging that has taken place has seriously affected the private equity market throughout the world. And now it is difficult to find private equity investments from the typical private equity investors. Next. Private equity in the developing world, I think the 3 leading examples are China, Brazil, and India. And in the last 10 years or so, a substantial progress of these countries can be attributed to inflow of private equity funds in these countries. And the funds have flown from all over the world, from Europe, from USA, and from all other developed economies. A critical impetus to much of this progress, in turn, has been the economic reforms adopted by many of these nations. the pace at which the capitalism has rolled through developing economies has been breathtaking. And India is a typical example of that. If you compare private equity flows in Pakistan and private equity flows in India, there is virtually no comparison. And we will come to the reasons later as to why we have lagged behind. A very important factor of flow of funds from developed to developing nations has been because of the fact that there are very few opportunities in the developed world to have the kind of return that a private equity investor needs, which I said is roughly 25 to 30%. That's a dollar-based return. And that's a very high return which you will not experience in a developed, which you will not be able to get easily in a developed economy. So that's why the flow fund is from developed nations to the developing nations. But Pakistan has been singularly unfortunate by not attracting these investments, and for various reasons. Next. Now come to the core point, the private equity prospects in Pakistan. If you look at the current private equity funds operating in Pakistan, there aren't many. I think the biggest private equity fund in Pakistan is the JS Private Equity Fund, I think roughly $160 million fund that was launched in 2007. And this fund was able to attract world-class investors, including IFC, to invest in Pakistani projects. The fund is still not fully invested, as I understand. It's about roughly 50% invested. And the fund will mature after, say, about 10 years in 2016, 2017. And the success of this fund will be very critical to the prospects of private equity in Pakistan. The other private equity ventures are TMT Ventures. Abraj Capital has made some investments in Pakistan. Our finance minister, Mr. Abdul Aziz Sheikh, was working for a private equity venture called the New Silk Route Fund. He was managing this fund, which used to invest in Pakistan and in some of the other economies. Given the lack of competition, I seriously believe there is a strong gap and there is a potential for a serious entrant. If somebody enters private equity market now, you will see a virgin territory. The problem is to convince the investors about the investment prospects in Pakistan, and for that you have to make a very serious effort given our current state of affairs. It is unfortunate that at a time when the asset prices are depressed, and private equity should make perfect sense in Pakistan. I launched Next Capital 3 months ago, and when I talked to some of my investors, that's the argument I put forward, that the asset prices are depressed. Karachi Stock Exchange membership used to cost 140 million rupees 2 years ago. Next Capital bought it at 60 million rupees.